Hey everybody, this is Ryan Mallory with a stock market bubble update for you guys. Now, the S&P 500, it was up 1.2% this past week. The Nasdaq was up 1.5%, and the Russell 2000, that's your small caps, it ramped 2.5% higher. Now, for the most part, the week was really a lot of choppiness, and it wasn't until the final hour of trading where we really saw some gains pour on into the market. Now, the week overall was really choppy. You had Monday that gapped higher and it was a decent rally, and then you had the bookend on Friday where it really wasn't doing anything all day long, and then you had a final hour ramp higher that really defined the week in terms of market gains. Everything in between was really just a nothing burger. On the weekly charts, it's really getting crazy. You got the Russell, it's up 13 out of the last 15 weeks. You got the Nasdaq up 9 out of the last 15. You got the S&P up 2/3 of the time at 10 out of the last 15 weeks itself. So going back to November, and that's what I'm measuring it from, it is a very, very bullish market. The same couldn't be said from like August through October, but from November till the present, totally different story. Very, very bullish market. And it's really getting out of control. But again, like I've said in the previous videos, when it's a stock market bubble, do we sell everything? No. You can still keep buying, but you got to have a line in the sand. You got to be paying close attention because at any moment, the market can correct itself, and it can correct itself in grand fashion. Back in 2000, it was the Nasdaq that dropped 87% from its highs to lows. This time around, it's starting to look like maybe it's not going to be the Nasdaq so much as it is the small caps, because the small caps are crazy right now. Nonetheless, this market's still tradable. I don't have any short positions in my portfolio, and I'm not trying to come across as a perma bear because I can't. I'm not even shorting the market. But that doesn't mean that I'm not still cautious about the market and I'm taking profits where the opportunities present themselves. Now, last week you had SPC, that's Virgin Galactic. It was rallying like crazy. And this week, the latest pump and dump from the Wall Street Bets crowd was Tilray. As you can see, Tilray had itself quite the week. Now, it didn't just start this week. It had been ramping up for the past couple of weeks here. And then finally, it dumped on Thursday and Friday in dramatic fashion. It dropped 50% off of its weekly highs, established on Wednesday. And so what does that mean? That means there was a lot of back orders. There's a lot of people that are bleeding right now. And it's a shame because we allow ourselves to get caught up in these pump and dump schemes. And it's not good. It's not good at all because it's not a sustainable trading strategy. Everybody's just like, oh, buy into the hype, buy into Dogecoin, Doggycoin. I still don't even know how you say that. And then you get Tilray, and everybody thinks that this is the next GameStop. Everybody thinks AMC is the next GameStop. Everybody has a stock that they think is the next GameStop. And so they buy into this hype and they can't sustain it. You get into these stocks that are going crazy, like Tilray, and you're buying in after it's up 200 or 300% over the past couple of weeks. That's a sloppy entry, and sloppy entries almost every time results in a sloppy exit. And so the best way to avoid those sloppy exits, not to get into sloppy entries. You got to play these things before they become super obvious. You got to play when they're just starting to break out. You take Tilray, for instance. The play on Tilray was back in the beginning of February, when this thing was in the midst of a bull flag pattern and it started to break out, and it broke out in a big way. But if you didn't get in under $20, this was a sloppy trade. It was very difficult to make money and to sustain that momentum. And if you're not raising that stop loss and taking partial profits along the way, you're setting yourself up for disaster. Now, are these cannabis stocks here to stay? I think so from a long-term perspective. You're not going to see these kinds of gains that you just saw this past week on a regular basis, no. But I do think that these stocks, while very volatile, do set up as some decent long-term plays. But I would stay away from the likes of Tilray and maybe look more at like CGC or the ETF that I like, which would be MJ. And MJ does have exposure to Tilray, but it's not based solely on Tilray. That's why you have that dramatic pullback in MJ, because this ETF was affected by the Tilray price action. Now, how about the Chinese stocks? Well, the Chinese stocks, they're doing pretty good. They had an incredible week. They had an incredible week the week prior, but even these are starting to get very stretched to the upside. You got Baidu that just has been going bonkers. This stock is up over 150% over the last 2 months. So don't go chasing Baidu. This would be a sloppy entry at this point, and it's going to result in a sloppy exit. So what do? You wait for a pullback. You wait for a retest of key support levels, but you don't get long here. And honestly, there's no key support levels nearby, so you just need to be patient. Maybe it takes you a few months to be able to get in. And before I get into my weekly charts, make sure that you're checking out my YouTube membership channel. With it, you're going to be getting every day, multiple times throughout the day, updates on all of the latest stock market developments. That's going to be updates on the S&P 500, the Nasdaq, and the Russell 2000 multiple times each week. Also, you're going to be getting updates each week on all the FANG stocks. That's Facebook, Apple, Amazon, Netflix, Google, Microsoft, and Tesla. And on top of that, you're going to be getting multiple updates each week on my master watch lists that I follow for both bullish stocks and bearish stocks. I'm always prepared. And I'm going to be giving you my daily setups that I'm watching each and every day, followed by the most intriguing stock charts in the stock market today. So check that out. Click join below and see what works for you. Now, let's take a look at the SPY weekly chart. This is your S&P 500 ETF. Remember last week I was telling you guys, there's this bearish wedge here that's forming, and yeah, it's kind of hard to break out to the upside. And if it breaks to the downside, it could lead to a substantial pullback. Well, guess what? We left ourselves open to the potential that it could break to the upside. And what did it do? It broke out to the upside. I'm kind of surprised by it. I didn't think that it could actually pull it off, but it did. And so right now, it is trading above the bearish wedge. That means this chart pattern is pretty much null and void at this point. So the key becomes next week. Can it follow through to the upside? Can it add more to it? Because that substantiates the break even more so. Now, drilling way down, let's go into the hourly chart of SPY. This chart is really what I'm watching the closest right now. And you can see it on the daily too, but it's much more pronounced on the hourly chart. And that's this slightly rising channel that we're in. Now notice, we have not broken out to the upside on this. This thing continues to see price hit its head up against the upper channel. And that's what we got going on right here. It's continuing to deflect off of that upper channel, and it hasn't broken through it yet. If it can break through it, that would be huge, but it has yet to do that. Now, with the hourly chart, you're getting about 6 candles every day that defines this hourly chart. On the 30-minute chart, you're getting 13. So there's a lot more price action than what you're gonna see in the daily and especially in the weekly. So it's very possible you see a lot more choppiness like what we saw in this past week here, while still being able to maintain the bullish narrative in this market. Now, how about the Qs? You still have the same kind of range that the S&P 500 and the Russell has. It's a tight range, it's going higher, but you have a little bit more headroom than what the Russell is providing us with or than what the SPY is providing us with. In fact, this thing still has a little bit more room to run before it really sees any kind of resistance from the upper channel. Now, from a long-term perspective, let's go all the way back to the March lows of last year when the market finally bottomed out from the COVID pandemic. This long-term trend line is still in effect, and really, it wouldn't be fun to be long on the market during this time, but probably one of the best things that could happen to this market is for a pullback to this rising trend line, because it would deflate the price action a little bit and it would create some better trading opportunities going forward. Because let's face it, a lot of the stocks that you're looking at are all at all-time highs, and it's forcing you to decide whether or not you're going to buy a breakout to new all-time highs from the current all-time highs. And outside of like Google and outside of Microsoft, I'm starting to wonder if some of these FANG stocks are beginning to top out a little bit, where it's basically like, hey, people aren't really willing to sell it yet, but there's not a lot of new buyers being attracted. You're seeing that in stocks like Facebook, Amazon that can't really break out. You're also seeing that with Tesla over the past few months, where it's really just stuck in this like $800 to $900 range, and it's not really wanting to go any higher from there. Apple, it's been kind of dead too. I actually own a little bit of Apple, and I've reduced my position in that stock down to a half position. Now check out IWM. Again, you have that long-term trend line off of the March lows, nowhere near testing that. Like the Qs though, it probably wouldn't be a bad idea for it to have some kind of a pullback to that trend line at some point in the future. I don't know if it's the near future or the long term. Probably in the near term, it's going to be very painful if it does pull back to that level. But there's still support at the 20-day moving average. You continue to see buyers step in there, and you got that rising channel that's still in place as well. Now, it's sitting just below all-time highs. It had a 2-day pullback this week, and with that 2-day pullback, you created a little bit of a bull flag there. When you drill down into the hourly chart, you can see that bull flag so much better. So if it can break out of this pattern, there may in fact still be more upside for the small caps going forward. Now, let's talk about the latest IPO, Bumble. It's one of those dating apps that probably a lot of people can relate to. They're buying into it because that's what they're familiar with. Guess what? You can't make any decisions off of 2 days of price candles. If you're really into technical analysis, there's nothing you can really do. I would be willing to say that fundamentally it is way overvalued. And like I said in other videos, go back and watch the Snowflake IPO that came out last year around September. I always tell you, hey, you probably have like 4 to 6 months to get in on the IPO, because when you see it originally start trading, that's like the worst time to be getting in. It usually sells off for a while before it finally starts to gain the attention of real long-term buyers. And if you're looking at it from a technical analysis standpoint, what are you really looking at? I mean, I can manipulate this thing all day long. See, I can make that price action look really like it's nothing, right? Or I can expand it and make it look really big. Or I can make it look like it's trading at some kind of crazy highs when it's really not. It's just all about the optics on these things, because there's nothing to really base it off of, because there's no price history. So give it like 4 or 6 months, and then you'll be able to make a good decision off of it, hopefully, and not get caught up in the FOMO of buying the latest IPO that really doesn't lead to anywhere. If you enjoyed this video, make sure to like and to subscribe. When you subscribe, you're going to be notified when I make new videos like this one that you just saw. And if you liked it, you're going to enjoy the ones in the future as well. I continue to produce these each and every week, and there's a whole bunch of new features coming up in the future. I'm really excited to roll them out one at a time. And let me know down in the comments below, Did you buy the Bumble IPO or not? Did you get caught up in the FOMO? What are you doing with those Tilray shares? You still have them, holding them? You got diamond hands? Or did you go ahead and get out of the stock while the going was good? Let me know down in the comments below. Thank you guys, and God bless. I can't believe I just said nothing burger. Who says nothing burger?